Hello everyone, welcome to Monday, April 13th, Market Opening Bell, your 10-minute guide to the stock market. Hong Kong stocks opened high last Friday. The Hang Seng Index briefly reclaimed the 26,000 level during the session, rising as much as 321 points to a high of 26,073. However, gains narrowed later, and the index closed up 141 points or 0.5% at 25,893. Total market turnover amounted to 246.3 billion Hong Kong dollars. The share index closed at 8,655, up 43 points or 0.5%. The Hang Seng Tech Index finished at 4,860, up 38 points or 0.8%. Southbound Stock Connect recorded a net outflow of 2.815 billion Hong Kong dollars. Among the flows, there was net buying of Alibaba, totaling 945 million, Guotai Junan International 480 million, SMIC 392 million, and CNOOC 363 million. Net selling was seen in the Tracker Fund, totaling 2.736 billion. The CSOP Hang Seng Tech ETF 879 million, and Yangtze Optical Fibre and Cable 567 million. According to statistics, southbound funds have bought Alibaba for 3 consecutive days, totaling $3.884 billion. For the whole week, the Hang Seng Index rose 777 points, or 3%, marking the second consecutive week of gains and the largest weekly increase since October last year. The H-share index and Hang Seng Tech Index rose 2.4% and 3.9% respectively for the week. Weekly turnover totaled approximately 863.7 billion Hong Kong dollars, with average daily turnover showing some expansion. On April 12, US-Iran talks held in Islamabad broke down, threatening the fragile 2-week ceasefire agreement that was originally set to expire on April 22nd. Since last week's rebound was largely built on expectations of a ceasefire, the collapse of negotiations may bring significant downward pressure on Hong Kong stocks this week. The Hang Seng Index is likely to continue filling the upward gap from last Wednesday, which spans 414 points between 25,254 and 25,668. So far, only 15 points have been filled, with the lowest point last Thursday at 25,653. Support is expected near the 20-day moving average at 25,383. On the mainland, the 3 major A-share indexes opened higher and continued upward last Friday. The Shanghai Composite Index briefly touched 4,000 but gave up the gain, closing at 3,986, up 20 points or 0.5%. The Shenzhen Component Index closed at 14,309, up 313 points or 2.2%. The Chinex Index ended at 3,448, up 125 points or 3.8%. Combined turnover in Shanghai and Shenzhen reached 2.3257 trillion yuan. For the week, the Shanghai Composite rose 2.7%. The Shenzhen Component surged 7.2%. The Chinex Index jumped 9.5%. The renminbi central parity rate against the US dollar was set at 6.8654, down 5 pips from the previous day. China released its March Producer Price Index (PPI), which turned positive for the first time since September 2022, rising 0.5% year-on-year. This beat both February's down 0.9% and the expected 0.4%. The improvement was mainly driven by a low base effect from last year and surging global energy prices. Since global oil and gas prices have not yet fully passed through to overall inflation, the improving PPI trend is expected to continue in the coming months. However, it's worth noting that while factory gate prices rose 0.5% year-on-year, Purchase prices for industrial producers rose faster at 0.8%. This indicates that upstream costs are increasing more quickly than end product prices, squeezing industrial enterprises' profit margins and causing gross margins to decline. Meanwhile, consumer inflation eased, with the March CPI rising 1% year-on-year, lower than February's 1.3% and slightly below the expected 1.1%. The slowdown was mainly due to softer food and core prices after the Chinese New Year, which offset the upward pressure from energy prices. Although inflation data was mixed, it did not hinder the rebound trend in A-shares. The National Development and Reform Commission stated that, together with the Ministry of Finance, it has promptly allocated the second batch of 62.5 billion yuan in ultra-long special treasury bonds this year to local governments. This is to support the continued steady implementation of the consumer goods trade-in programs. Since the beginning of this year, nationwide sales from the trade-in program have exceeded 433.2 billion yuan, benefiting over 60.93 million people and driving a 2.8% year-on-year growth in total retail sales of consumer goods in the first 2 months, an acceleration of 1.9 percentage points compared with December last year. The Ministry of Industry and Information Technology, together with the NDRC, the State Administration for Market Regulation, and the National Energy Administration, held a symposium with major companies in the power and energy storage battery sector. The meeting aimed to address involution and excessive internal competition in the industry and to regulate market order. It emphasized the need to firmly resist unreasonable and unfair competition practices and prevent excessive domestic competition from spilling over into overseas markets. The meeting also discussed a list of negative behaviors of irrational competition in the power and energy storage battery industry, clearly defining what constitutes improper competition, while continuing to advance capacity warning and regulation measures to prevent blind expansion. The policy crackdown on competition below cost is expected to help stabilize and improve battery supplies gross margins. After capacity normalization, leading companies with technological advantages such as CATL will further consolidate their competitive edge. On Friday, CATL rose 9% after ex-dividend, becoming the best performing blue chip stock. It's reported that Alibaba is expected to release its AI video large model HappyHorse in about a week. Its share price rose 2.1% on Friday. Separately, Alibaba Cloud's former Chief Technology Officer Zhou Jingren will lead Alibaba's artificial intelligence division as part of the company's strategic shift toward a monetizable model. Earlier, there were personnel changes in Alibaba's Q1 open source large model team, with technical lead Lin Junyi suddenly departing. It's understood that Lin's team was overly focused on benchmark rankings and open sourcing, which did not bring value to the cloud computing business. After taking office, Zhou Jingren is expected to prioritize alignment between model development and the company's cloud business growth and revenue targets. Alibaba's flagship AI hardware, the Q1 AI Glasses S1, officially opened full channel reservations on Friday and will be available for a spot sale this Wednesday after limited time discounts and national subsidies. The lowest effective price is 3,499 yuan. According to reports, JD.com will soon launch its open departure service, which is currently undergoing grayscale testing in the app. The page design closely mirrors mainstream ride-hailing applications, with Jinan as the initial test city. The service is jointly launched by Chang'an Automobile and may and JD.com may abandon the traditional aggregator platform model and instead deepen cooperation with automakers operating under new e-commerce plus car manufacturer mobility model without relying on third-party ride-hailing capacity. According to IDC data, Lenovo Group shipped 16.5 million personal computers in the first quarter of 2026, down 15% quarter-on-quarter, but up 9% year-on-year, beating market expectations. The stronger performance was mainly due to continued pre-buying by the market in anticipation of tariffs and rising memory prices, as well as corporate demand for Windows 11 upgrades. The optical fiber sector weakened across the board, with Yangtze Optical Fibre and Cable dropping 7.5%. Its A-share shareholder, Changjiang Communication, plans to reduce its holding by no more than 1 million shares from last Friday until early July, putting pressure on the stock. There are also market rumors that the centralized procurement, bulk purchase of optical fiber and cable by the three major telecom operators may be delayed by 1 quarter or longer, potentially affecting related companies' revenue. In response, Yangtze Optical Fibre stated that no official announcement has been made regarding any delay in the procurement, and operators' centralized procurement information should be based on official releases. Over 65% of optical fiber manufacturers' business typically comes from telecom operators, bulk procurement. If the procurement is significantly delayed, it will directly impact these companies' annual revenue plans. Some analysts believe telecom operators may be negotiating with manufacturers by adjusting procurement timing, seeking better pricing terms amid the current rising fiber prices. U.S. stocks showed mixed performance last Friday. The Fear Gauge Fixed Index fell 0.26 points or 1.3% to 19.23. The Dow Jones Industrial Average opened higher but closed down 269 points or 0.6% at 47,916. The S&P 500 dipped 7 points or 0.1% to 6,816, while the Nasdaq rose 80 points or 0.4% to 22,902. The Nasdaq China Golden Dragon Index, which reflects the performance of Chinese concept stocks, rose 20 points or 0.3%, closing at 6,806 points. For the week, the S&P 500 gained 3.6% and the Nasdaq rose 4.7%, both posting their best weekly performances since November last year. The Dow also rose about 3% for the week. Cheap stocks were in favor, with Broadcom rising 4.7%, Nvidia up 2.6% and Intel gaining 1%. Major technology stocks mostly rose, with Amazon up 2%, Tesla up 1%, Meta slightly higher by 0.2%, and Alphabet slightly lower by 0.2%. The U.S. March Consumer Price Index rose 3.3% year-on-year, up from 2.4% in February, and hitting a new high since May 2024, in line with market expectations. On a monthly basis, it increased 0.9%, the largest single month gain since mid-2022, also meeting expectations. Core CPI rose 2.6% year-on-year and was slightly below the expected 2.7%. On a monthly basis, core CPI rose 0.2%, unchanged from February. The jump in March inflation was mainly driven by energy cost shocks from the Iran conflict rather than broad-based price increases. Although headline inflation has reached 3%, core inflation remained relatively mild. The market is now watching whether energy pressures will further permeate into other goods and services. Our stock pick today is Lead Intelligent Equipment, stock code 470. Lead Intelligent Equipment is primarily engaged in the research and development, manufacturing and sales of various intelligent equipment, including lithium battery intelligent equipment, photovoltaic intelligent equipment, logistic equipment, and 3C intelligent equipment. Its intelligent equipment is equipped with industrial control software that can streamline multiple production processes, helping customers transition towards highly automated and unmanned factories. This enables customers to further reduce labor costs, improve production efficiency, and advance their green initiatives. According to 2024 revenue figures, the global new energy intelligent equipment market accounted for approximately 15% of the global intelligent equipment market. The group ranks as the second largest new energy intelligent equipment supplier in the world by revenue, with a market share of 2.9%. On the other hand, the global lithium battery intelligent equipment segment accounted for approximately 13.5% of the global new energy intelligent equipment market in 2024. The group is the largest lithium battery intelligent equipment supplier in the world by revenue, with a market share of 15.5%, and is also the largest lithium battery intelligent equipment supplier in China, with a market share of 19%. The group's product portfolio in the lithium battery sector fully covers the front-end, mid-end, and back-end processes of lithium battery manufacturing. It is capable of delivering complete turnkey production line solutions to customers. Its products and solutions comprehensively cover different application areas such as electric vehicles, energy storage, and consumer electronics, as well as various technology routes including lithium iron phosphate, LFP, and ternary and NMC, and different battery formats. Its client base includes leading global lithium battery companies such as CATL, Tesla, Volkswagen, BMW, Mercedes-Benz, Toyota, LG Energy Solution, SK On, Samsung SDI, Panasonic, and BYD. In the photovoltaic sector, the group provides customers with complete turnkey production line solutions and individual equipment for photovoltaic module and photovoltaic cell manufacturing. Its client base includes leading photovoltaic companies such as Tongwei Solar, Longji Green Energy, JA Solar, and Trina Solar. In the 3C intelligent equipment sector, the group offers customers multi-series intelligent equipment centered on its self-developed automatic vision inspection technology, 5-axis precision fluid platform, and 800-volt integrated testing platform. In the intelligent logistics sector, the group designs and provides customers with intelligent logistics equipment, including shuttle vehicles, stackers, conveyor lines, and intelligent logistics warehouses by deeply integrating data-driven algorithms, digital twin simulation, and dynamic scheduling optimization software. It helps customers build unmanned factories and smart factories. Suggested buy price $46.5, target price $51, stop loss $44.5. I do not hold the above stock.